Kau cakap ada perubahan tax polisi baru.
Apa lagi yang berubah ni? Corporate tax ke? E-invoice?
Semua bos daripada tax policy framework sampai dari national tax development.
Lama, panggil semua tim tax kita buat meeting cepat.
Okay, baik.
Berikan saya solution secara general lah. So saya akan paskan dekat manager saya untuk berikan kepada korang.
Okay, secara ringkas ni, tax policy ni adalah dasar kerajaan untuk menerbit cukai, beri insentif dan juga akaunting dalam ekonomi macam kerajaan cukai syarikat dan juga insentif corporate. Okay, meanwhile ada insentif development juga, dia merujuk kepada perubahan tinggi dalam sistem cukai contohnya e-invoice, capital tax dan juga standard antarabangsa macam DPS dan juga usaha lawan tax avoidance.
So for finance department, Aisyah, could you please explain what the tax framework is?
Okay, assalamualaikum and hello everyone. Today I will be discussing Malaysia tax framework and one current issue related to it. So my name is Aisyah. I'm a staff member from finance department. So sure, a tax framework refers to the overall system used by the government to impose collect and administrative tax. In Malaysia, it includes tax laws such as the Income Tax Act 1967, tax policies, tax administration by HDN, and compliance requirements for individuals and companies.
Okay, what is tax framework important, especially for corporate taxpayers?
Okay, so the tax framework ensures fairness, transparency, and consistency in taxation. For corporate taxpayers, it helps them understand their tax obligations, plan their business activities efficiently, and avoid penalties. It also ensures that companies contribute fairly to national development.
Oh, I see. So one current issue related to the tax framework is the implementation of e-invoicing.
Yes.
Could you explain what this is about?
Yeah, so e-invoicing is a system where businesses issue invoices electronically in a standardized format and submit them directly to FHDN. The aim is to improve tax compliance, reduce tax evasion, and enhance transparency in business transactions.
How does this e-invoicing system affect companies in Malaysia?
For companies, especially SMEs like us, the main challenges include system readiness, additional compliance costs, and staff training. However, in the long term, e-invoicing can improve record keeping, reduce error, and simplify tax reporting.
So in your opinion, how should companies prepare for this change?
So in my opinion, companies should start by understanding the requirements, upgrading their accounting system, and training their staff. Early preparation will help them adapt smoothly and avoid complex issues in the future. That's all from me.
Thank you very much for sharing your insight. This discussion has helped us understand the tax framework and the current issue of e-invoicing.
So, this topic is important for your future career, especially in accounting or business, because it shows how tax rules are applied in real practice. E-invoicing affects how companies record transactions and report income to LHDN. Understanding this system helps me make better professional judgments and avoid compliance risks, especially for corporate taxpayers and SMEs. Before learning this topic, I did not fully understand how closely taxation is linked with digital systems. I used to think invoicing was only an internal accounting process. The main challenge for me was understanding how tax laws are implemented through technology like e-invoicing. Through this learning process, I realized that taxation is not static and requires continuous learning and adaptability. Going forward, I will improve by staying updated with tax policies, strengthening my knowledge of digital accounting systems, and being more prepared for regulatory changes in my future profession.
Moving on to tax department. So your topic is type of tax policy, right? Can you explain what it means?
So the tax policy referring to how the government structured its tax system. So it is to raise the revenue and also to influence the economic behavior. So the type of tax policy used affected the business decision, income distribution, and also the spending patterns.
Oh, I see. So what types of tax policy are commonly used?
Okay, generally there are three main type of tax policy, which is the first one is progressive, regressive, and proportional tax policies.
Can you explain each of them?
Sure. So the first one is progressive tax, means the tax rate will increase as the income increases. So this policy is based on the ability to pay principle, where the higher overall, each type of policy have this advantage and also disadvantage. So in practice, government usually combine different tax policies to balance the fairness and also efficiency and revenue generation.
Through this learning process, I realized that understanding tax policies is important for my future as it helps make me inform financial and economic decisions. Tax policies also affect businesses and society by influencing spending, investment, and income distribution. One challenge I faced was understanding how each tax policy impact different income groups. From this, I learned to think more critically and consider real-world implications. Moving forward, I will improve by staying informed about current economic issues and strengthening my analytical skills. Overall, this topic has increased my awareness of the importance of balancing fairness, efficiency, and revenue in tax policies.
So for legal department, since LHDN is coming soon, I think this is very important. Can you please explain anti-avoidance and tax compliance and what's the current issues in Malaysia right now?
In simple terms, anti-avoidance refers to rules that prevent companies from reducing tax unfairly through aggressive tax planning. In Malaysia, this is covered under the Income Tax Act 1967, where LHDN has the power to disregard artificial or suspicious arrangements made just to avoid paying tax.
Okay, so how about tax compliance?
Tax compliance means companies must declare income correctly, submit tax returns on time, and keep proper records, usually for at least 7 years. Compliance is important because even if a company is not avoiding tax, poor documentation can still lead to penalties.
So is there any current issue related to this?
Yes, a major current issue in Malaysia is the increase in tax audits and enforcement by LHDN. Recently, LHDN has been more aggressive in auditing companies, especially on transfer pricing, underreported income, and incorrect tax incentive claims.
And how this affect corporate tax?
It has a direct impact on corporate tax. Companies may face additional tax assessments, penalties and fines, and higher compliance costs. This is why many companies now focus more on proper tax governance and compliance rather than risky tax avoidance strategies.
So in short, what's your advice before LHDN comes?
My advice is simple: don't avoid tax, comply properly. In today's tax environment, strong compliance is the best protection a company can have.
Alright, let's hear now.
This topic on anti-avoidance and tax compliance is important because it reflects real corporate tax practice in Malaysia. Under the Income Tax Act 1967, LHDN can disregard artificial arrangements used to unfairly reduce tax, while tax compliance requires companies to report income accurately and keep proper records. A key current issue is the increase in tax audits and enforcement by LHDN, especially involving transfer pricing, underreported income, and incorrect tax incentive claims. This directly affects corporate tax as companies may face additional tax, penalties, and higher compliance costs. Before this, I did not realize that even companies without bad intentions can still be penalized due to poor documentation. This topic challenged my mindset and helped me understand the importance of proper tax governance. For my future career, this knowledge is important because it improves my professional judgment and reminds me that strong compliance is the best protection in today's tax environment.
Alright, so thank you for each department. So in addition, I think I will add more about tax policies and other development. So I will give you guys international tax development. So what is international tax development? International tax development refer to changes and improvement in global tax rules and standards that guide how countries tax across border income and multinational companies. So why are international tax developments are important? They are important because businesses and individuals increasingly operate across borders. Without international tax rules, there could be double taxation, tax avoidance, or unfair tax competition between countries.
So boss, can I know what major international tax development?
Sure, one major development is the OECD BEPS project, which stands for Best Erosion and Profit Shifting. It aims to prevent companies from shifting profits to low tax countries artificially.
So how is this done?
Alright, through international standards such as stricter transfer pricing rules, country by country reporting, and better cooperation between tax authorities.
Is there any current issue in this international tax?
Yes, for sure. A key current development is the global minimum tax under OECD Pillar 2. So what it is about? It sets a minimum tax rate of 50% for large multinational enterprises with global revenue for at least €750 million, regardless of where they are operating.
So are there any challenge with this legislation?
Yeah, I think different countries adopt and implement the rules at different speeds. This create coordination challenges, legal complexity, and uncertainty at the international level. So last but not least, in conclusion, international tax developments focus on creating fair, coordinated, and transparent global tax rules. Initiatives like BEPS, Global Minimum Tax, DTS, and digital taxation show how countries work together to address cross-border tax challenges.
Alright, thank you for your speech.
International tax development refers to global tax rules that govern how multinational companies are taxed across countries. Key examples are the OECD BEPS project, which prevents profit shifting, and the global minimum tax under Pillar 2, which sets a 15% minimum tax rate for large multinational enterprises. In real practice, these rules reduce tax avoidance and improve transparency. For my future career in accounting and taxation, understanding them helps me advise businesses on compliance and ethical tax planning. Before learning this topic, I did not realize how international tax rules are coordinated globally. I assumed taxation was mainly based on domestic laws and was unaware of how multinational companies could shift profit to low tax countries or the role of the OECD. I found the topic challenging, especially understanding the global minimum tax under Pillar 2 and how different countries implement the rules at different speeds. Through this, I learned that I need to move beyond memorization and improve my analytical skills when dealing with complex tax issues. To improve, I plan to follow international tax updates and practice applying tax rules to real-world situations.
Okay, I will explain the corporate tax effect. Corporate tax affect how companies make decisions. When corporate tax is high, companies earn lower after-tax profits, so they may reduce investment and expansion. It also affects financing because interest on debt is tax deductible. Companies may prefer borrowing instead of equity, which can increase financial risk. The impact doesn't stop there. Shareholders may get lower dividends, employees may face fewer job opportunities, and consumers may pay higher price.
Is there any current issue related to corporate tax?
A key issue is the global minimum corporate tax 50% by the OECD. It aims to prevent tax avoidance by multinational companies. However, disagreement between countries create uncertainty. This can delay investment, increase compliance costs, and affect where companies choose to operate. Okay, overall, corporate tax strongly influences business decisions and economic growth.
That's a good explanation. Alright, I think that's all for today. I think we open up this session.
So, this reflection highlights my learning from corporate tax and how it has improved my understanding of business decisions and my future career. Corporate tax is important because it affects how companies plan investment and financing decisions. High corporate tax can reduce profits and limit expansion, while tax-deductible interest may encourage companies to rely more on debt, increasing financial risk. One challenge I faced was linking tax rules to real-world issues, especially global developments such as the OECD's 50 minimum corporate tax. Through this topic, I realized that understanding the impact of tax policies is more important than memorizing rules. To improve myself, I will stay updated on current tax developments and practice applying tax knowledge to real business situations.